Hey, good afternoon, everyone. Hey, thanks for coming. My goal today is to go over the results of our auto trader for the last week, and just to give you some insight about it. The first thing I'll do is I'll show you the two trades we took today in the trading room. We had two 3-point trades today, and that was it. If you're in the trading room this morning, you got them. One was right here. The trade went 12 ticks or 3 points. We had the minor quant. We had order flow, momentum. And here's our look into the cash markets. And the volume metric on the cash markets was down. Took the short trade, and we got 12 ticks. Here was a double top. We know that the multi-time frame analysis, we can see this color. We're looking for a short trade only. We had the major quant. This is money flow analysis. The minor quant money flow analysis. You have 2 out of the 3. The top one's the most important. That was the one that really helps move the market. We had momentum. Didn't quite have order flow yet, but as soon as the trade ticked in, we got it. The cash metrics on the S&P 500 were not with us, but that was enough to take the trade because it was a perfect double top. We also trade price action and market structure. You can see the slope of the 50s heading down. You can see the intermittent periods of background, which is pink, and this is teal. Took the trade, we got another 12. So that's it. Those were all the trades we took, and I'll just show you that this is our point of control. The point of control here was in the upper 1/3. Here, the point of control wasn't, but there was enough of the independent variables that we look at to take a trade in order for us to go short here. There were trades on the E-mini, on the 6E this morning. I didn't take them because they were right here because we already hit our profit target. And the one was right here. Strategy entry, quant line, order flow and momentum. That's a first target. Re-entry, out of consolidation. That's a tough trade because we have order flow and momentum against it on the trade. So that may have censored it. And then we have this trade. Strategy entry, 2 winners. And the other trade that a lot of traders in the room asked me about was this entry right here. And that was, again, a perfect double top. Now we're looking for a roll short. And we get the full Monty here. Order flow, momentum, money flow, everything, telling us that the 6E is going to roll. The problem is it's rolling into the point of control, and you have to make an assessment of whether or not you think that that point of control is going to get broken. You're also into the modified 15, so there's a lot of support, and it turned out that the trade just rocked. Now I stayed out of it because I don't like to trade into the point of control. So I'm sorry, this is the value area low. I just didn't want to take the trade. A lot of the traders in the room did take it, and you can see that it smacked through, and that was a full winner, and that's a huge move on the 6E. Really, all depends upon your how much risk you want to take, and I don't want to take a lot of risk. So that was another entry. Now we don't trade the yellow modified 15. And you can see what happens. There was an entry here. There's a move down, a B, a C, a potential continuation short, and you've got order flow, you've got money flow, order flow, and momentum on the trade. and the trade went nowhere, because this is telling you that there's not enough intrinsic volatility in the market to likely provide you with a continuation trade. This trade went 3 ticks and would have made you no money and come back and stopped you out. So, and there was nothing on crude, absolutely nothing. And so here's a perfect entry on crude. It's just, it's much later in the day and there's no volume right here. Consolidation entry and continuation. And again, you've got money flow, which is real important. The upper line is momentum. Bottom line is order flow. And up you go. And the most important is you have the green background bias. And during the period of time here, when there's no background bias, you can see how the market just chops. This is the period of time where you just don't want to trade. And then when you wait for that multi-time frame alignment and you get the retracement or the pullback to support, you get a signal and you take it up, you have a high probability winner. So those were our trades today. Now I only took one of those trades with 2 contracts on the E-mini. I took one with 4. If we would have taken it with more, if I would have taken it with 4, we would have made about 600. But we made 362.50, and everybody in the room made nice money today. So let me go over all the Auto Trader trades for the week, and there weren't that many because the Auto Trader only traded 2 days this week. But what I did was I highlighted the trades. Now, I just want you to be aware that this volume data on each candle is not stored because it would use up too much system resources. So when you close your computer and reopen it, and then you do a look back, you can see it's missing from the candles. So if you want to do your own look back analysis, what you have to do is you have to use Market Replay. Market Replay will reproduce all this perfectly for you. You can't just do it. And I'm going to answer all the questions at the end if there are any. So you see we opened the platform right around 8 o'clock this morning, and it started accruing this volume. Now, the other thing that's important to know is that all the indicators below are fractal indicators. And if you open this up, actually it doesn't show it here, but it shows it here. If you open up the 3 line, hang on one second here. Oh, this is the beta 3 line. This doesn't have the output hanging out. This does a multi-time frame assessment, and so does this. And the background bias also does a multi-time frame assessment. It intrinsically written into Ninja's code is when you're in real time, the multi-time frame assessment is made by looking at the candle that's forming and compares it with the candle that's formed. So the analysis is done between these 2 candles. But then when you close the platform and we open it, you're going to see that the colors below change. And that's because when you close it and reopen it, it's now doing the comparison between the forming candle and the future candle. And that's just an inherent flaw in the platform. So it modifies the color here. And when I kept this open so you could see the actual color, we were trading live in real time. Because if I closed it and reopened it, we lose the volume ladder here, or the volume profile. And we would also wind up shifting the color of all these lines down below. Now, I just wanted to say a couple of things. That we could put the delta of the candle in, but it doesn't have any predictive value whatsoever. So what we create is this lower line, which is the delta moving average of the 2 higher time frames. That has predictive value. There's a lot of programs that use that one number right above, and they just stick a thing here that if that number is positive, it goes up. If it's negative, it goes down. It's not going to help you. And in addition, in my assessment, what you want to know is only this, is where is the commitment of traders on a given candle? And you can see now I chose to outline it in black. You can outline it in any color that you like. Some traders outline it in magenta. I just like it black. This is really the only key thing as far as I'm concerned. We could put the data in too, it's in here. We could put the bid-ask disparity in each tick level. But it doesn't give me any useful data. And all it does, I mean, if you have to stare and analyze information that doesn't increase the precision of your trading entries, it doesn't help you. Now, if you want to trade a top or a bottom, really what you're going to look for now, this is the high of day, the price high of day, and I don't know and here's the low of day. Now, these are real critical areas. Now, if you're going to trade it, this is just my recommendation. As the day progresses, remember early on, when you have a high a day, it's easily moved. But as the day progresses and volume accumulates, and here this is the total volume on crude right here is 242,466 contracts. You can see it right up here. We're very volume. Whoops. We're very volume conscious here, and you can see that we analyze the total volume here, and also this tells us the number of contracts crossing per minute right here. You can see that the number of contracts crossing per minute is very small, so volume is low. And you can see here the point of control of the candle is close to the top. So, we don't anticipate a break of this high a day, but it can happen. So what I like to do is, now the high of day obviously always moves. I want the high of day to be associated with some other unmovable area of resistance or support. I like the value area high or the value area low or this pivot. And here's what I look for. I look for a test, a move down, and then a retest. And on that retest, on the candle body, if you want to get a low probability trade, you want the commitment of traders to be right at the top. And then you have yourself a nice low probability reversal, because reversals are very dangerous to take. Right there. That's where you get your low probability. So that COT, or commitment of traders, is really important on taking counter trend trades. And you can see right here, this is only a single hit, but you'll also want the tick, the tick level that has the commitment of traders to be red, which is the way it is now. It's telling you there's an overabundance of sellers on the trade. Now, this is a first hit. If you want to take it, it's risky. And optimally, you want to wait for the retest, and then move down. But you can see it's setting up in a way where you may get a down close. The COT is at the top. That's hard to go over anything when you have this kind of volume. This is very, very low volume. And what it is, these are obviously telling you about market sentiment. And when market sentiment is driven by just a tiny number of traders, it doesn't have as much validity as when it's driven by high volume. But that's what you're looking for, and that COT is a real important variable in taking a trade. So I don't really care, and in every tick level you can see whether there's an overabundance of buyers or overabundance of sellers just by looking at the color. The lighter the color, actually the darker, the way we did it, the more intense the color, the stronger the overabundance of sellers. The actual number, to me, is irrelevant. I just want to know who's in control, the buyers or the sellers, the bears or the bulls, and that's all that matters. Now, let's go over some of the auto trader trades. Now, what I did was I highlighted the trades. These are some of the trades that I took. But the auto trader, now here's the auto trader trade. Now, unfortunately, this 3-line we're doing, it's in beta phase testing, and in the beta phase of our testing of this line, it also does not accrue data going back. Now, once I close the platform, all of the colors here are going to be lost. When we finalize it, and it's going to be finalized actually today, but it's not going to go into the platform probably until Tuesday. It's a very, very strong upgrade. It's going to be called our 3-line 2.0, and it's actually going to have 3 lines again. So I don't know what the colors are here of these 2 indicators, but this is a trade I took in the room. And this has to be pushed to the left because when I closed it and reopened it, it was pushed to the right by the Ninja platform. This is a 14-tick trade. That's a $300 trade based on our ATM. I took this trade. This was a 6-tick trade, and that was a $100 trade. This is a trade I should have taken and felt like rolling over and killing myself, but I didn't because it was another $300 trade. Now, here's an auto trader entry right here. And that was a $300 trade. I can't show you what these lines are because they don't accrue. Went 20 ticks. This day, the auto trader made $620, and this was on 12/20. Let's go back. I think it only took 1 crude trade this whole week. And remember, what we're looking for on the auto is not a lot of trades. We're looking for a lot of winners. Because remember, if it trades like it did this week, with I could ask Sergio, but I think it took about 8 or 9 trades, maybe 10, and 10 of them were winners. You can trade as many contracts as you want, and you can make as much as you want. So there was just 1 trade on crude. On the E-mini, I don't think it took any trades. This is a trade I took yesterday, 5.5 points. I took both these counter trend trades. You see the volume profile, the commitment of traders is gone. It was perfectly set up. And 1 went for 2 points and 1 went for 1 point. 1 hit our first target, 1 hit our second target. We didn't get any 3-target trades, but these were nice trades on 4 contracts. Then I reversed it and we got a 5.5 point trade. But let me just look for the auto. I'm pretty sure the auto did not trade it. It traded the currencies a lot. And you can see what happens to price when background goes green. Remember, this is not looking at price on our trading chart. It's looking for that multi-time frame alignment of the 2 higher time frames. Now, and this is what this is. This is a signal that the auto is thinking about the trade, this thick X, but for some reason, it decided not to take it. And I can't tell you exactly why, because the lines below our beta 3 line doesn't accrue data. You can see that the market internals here in the cash markets were green, and we had the major quant and the minor quant, and that's telling us that's an indication of money flow. Had to be something with this beta 3 line, but it prevented it from taking this long trade. Yeah, there were none. Here's another thinker right here. It was another winner, but it stood down on it, and I don't know why. Now, we get these signals on our charts, and in the trading room, we could take them, but didn't take it. So let me go to the 6E. It took a few 6E trades. Now, the 6E today was a mess. And I find the 6E hard to trade. You see background bias here on the 6E. Sometimes, again, the ninja glitch. I can try to reload the charts for us. And sometimes the background will come back. But I can still show you the entries. That's our trade analyzer. If you want to trade a whole bunch of different markets at the same time. There we go. We've got the color back. Look at that move on green background bias. Again, that green, don't counter trend it. Just looking for a trade. I know the 6J, it had a lot of trades, and I'm positive there's a trade on the 6E because I saw it. Sergio, you got to get that right here. Here's the first. It made 150 on this trade. It took this trade for 90. I'll take off the scaling. Whoops. Sorry. It's right here. Took this trade for 93.75. And it took this trade. This is a long trade before it got to its target here of 150. 3 winners in a row on the 6E. Here's another, a fourth on the 6E, 100. And we trade it live, and these are the results from our back end. And the server is in Chicago. We get the signal just like you do. Whatever delay there is in the signal, we get it. And there's really almost no delay. What happened on the days that the auto didn't trade is it puts the trade in very early. Yesterday, there were 6 or 7 entries, and then it cancels them if the trade entry doesn't mature. As soon as this candle develops one tick to the upside, it knows where it wants the trade to end, and it puts the entry in. And then if it doesn't fill at the price it needs, it just cancels the trade. So it will cancel multiple trades in the course of the day. We do that so that you're in the trade early, way before it hits, and the auto just takes it out. Okay, there was just those 4 6Es, all for winners. Now, I know it did not take any NQs, so I'm not going to go through that. It didn't take any gold trades, so I'm not going to bother to show that. The 6J. Here are also things that we put on here to show that it's thinking, but it took some 6Js. It's thinking, decided not to trade. Now, I don't know why it didn't take these trades. These are unbelievable entries. I don't trade the 6J, but if I had the 6J in front of me on this trade, I'd be in. I would be in on that trade as well. I don't know why it didn't take it, but it stood down. Again, here and here. To me, they're amazing. I think the reason it didn't take it is because the market's oversold. It won't take an oversold, and the market's oversold. That's the reason. There's a trade for 150. Now that's 4 or 5. That's our sixth winner. 4 on the 6E, 1 on crude, and this is our sixth on the 6J. It's just thinking here. Didn't take them. I think there's another. There's our seventh for 150 on the 6J. Here's our eighth, 6J, 150. If I didn't circle the candle, it did not enter. I think that's it. We're on the 14th, so that's it. And we've got 8 trades. Now, I know it took a trade on the 6C, and I think it took a trade on the 6B. Let me just quickly go through the 6B. No, both thinkers, but no taker there. There it is, only $50. That's 9. Now, there was only one 6B trade. And let's take a look. That was it on the 6B. And let's take a look at the 6C. Oh, I didn't show that. Here it is. I maybe should have showed those entries for a longer period of time. The thing is, it's hard to analyze them because the data below has changed. All right, here's the 6C. Let's just go a little slower. Now we've got 9 entries and 9 winners. And let's see if it took a 6C entry. I was thinking there, and that would have been a loser. Didn't take it. Just thinking over there. There we are. Here's our 10th for 120 right here. And you can see the perfect alignment here. Here, even on a look back, you've got the quant for money flow. You've got order flow. You've got momentum. You've got green background bias, pull back to support. Now, the auto trader actually looks at the number of ticks the candle body is off of support. It can be no more than 2 ticks off support or 2 ticks off resistance. That's another important independent variable. The space between the 50 and the 15 is the way we assess overbought, oversold. 13 ticks is the maximal MA diff, we call it, moving average difference. Once that space gets greater than 13, what we assessed on 2 years of market replay data, the positive predictive value of a trading entry starts to drop. And what we're looking for are low risk, high reward trades. And as you start moving to that overbought, oversold zone, the likelihood of really getting a runner and getting a full winner really starts to drop. And this wasn't a full winner, but it made $120. So that's it. You saw there were a lot of potential entries I would have taken. Excuse me. And here's one of them. Now, the auto didn't take it. And it's a loser. So it had 10 trades and it had 10 winners to this week. I don't have the grand total, but it's well over $1,000. it made for no screen time and no work. Let me just close that down. Let me just move this over so we can see what the market's doing now. And I use our software to, and you can see once you get this green background bias, you're going to get the price is going to go up. Now, I don't think this is correct. I'll just refresh. The multi-time frame alignment is really I think the most important of all the independent variables, and the one that everyone neglects. I don't think you can trade without it. Just my opinion. The only thing that creates it is institutional money. Yeah, see, it redid it. This is the only, and that's that's a NinjaTrader glitch. All the fractal indicators, but look at these low probability short entries when you've got this pink background. Strategy short, consolidation short, strategy short, winner, 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 because all your time frames are heading down. Money is flowing out of the market, and you've got this multi-time frame lock, and everything is heading to the downside. And you can see on the trade, you have no downside support to break. There's the low a day. Now if we can scroll back, we can see where it was when the trade was taken. Still plenty of room here to the LOD from the entry to the first target. Plenty of room here. Plenty of room here. I think you are. I think you do. May not have, because here it is here. Now, this pushed it down. This would have been a little bit tougher. You would have had to trade into the LOD, but this is a clean trade, and that's a clean trade. And this is an important variable. It's tough to trade into the higher day or lower day. So, this is that's that 10 to 15% discretionary trading that you just have to make up in your mind. And basically, you have to make it as part of your. You have to make it a fixed part of your playbook. You're either going to trade into the lower day, or you're not going to trade into the lower day. Or you're going to trade into the lower day if every single independent variable is in your direction, then you'll do it. But you have to make a fixed plan. And if you do it the same every time, I mean, that's the way to do it. So let me see if there are any questions. Whoops, wrong one. Okay, got some. Okay. Okay, Bob, the difference between the beta 3 line and the old one, let me tell you what I'm not going to bother to tell you. The reason I'm not going to bother to tell you is the beta 3 line didn't work. And what Sergio is doing is in the process of creating a 3-line 2.0. I'll tell you what my concept was here. And it's based on the premise that the market delta has validity. Now, everybody thinks things have validity because they're told they do. It's the number that sits above the candle. So let's say this was, a minus 102. So this meant that there were 102 more sellers on the dome than there were buyers on the dome in this candle. Now, this individual number doesn't have any validity. But if you take all of these numbers in the 2 higher time frames and you place them in a 15-period moving average, and you create a line, this line, and then you you do the same analysis here. It's a delta moving average here, and it's a 2 time frame analysis. This on this 5 range, this was the 8 range analysis, and this was the 13 range analysis. And you would think, and let's go to here. This is the only place when you have green, that delta moving average is telling you there's an overabundance of buyers. Here now you have red-green. Here's the faster line. Here's the slower line. That it really is a good. Nothing's going to be good right now because there's absolutely no volume. But it doesn't help. I mean, it's against winners. So it would keep you out of winners. It doesn't turn. And my feeling is, and it's that's the thing. You can't base your assessment of what's going to work on your intuition. Like I felt intuitively that the number of the buy-sell disparity in any given candle placed in a moving average would provide you with a great and very elegant way of determining whether you're likely to get a continuation trade. It just doesn't happen. So we're knocking it out. That's our beta. That's the beta version that we tried. We're always trying to make the platform better. And it was a dual delta moving average. So what we're doing is we're going back to the old way of doing it. And that is, we're going to make that multi-time frame assessment squeezed into one line. We're going to make the multi-time frame assessment of momentum. We're bringing it back here. And what we're going to do is something brand new. I don't mind talking about it, and I'll show you what we're going to do. What we had always done is eliminated the stochastic line, which was here. And let's just quickly put a stochastic line in. And I'll show you why I don't like the stochastic. And I'll show you how we got around it. I think we're going to beta test it and see if it helps. But I think it's a really elegant indicator. Oh, Jesus. I'm sorry. I didn't bring the stochastic indicator down. But I'm going to show you what we're going to do. Now, if it works, we're going to program it into the algorithmic, which is really what this lecture or what this webinar is about. But our entries are really solid entries. Let me just bring down the stochastic, and I'll show you what we're going to do. We're going to change the stochastic a little bit and make it really, really cool. I'll show you the problem with doing a stochastic analysis and the way that we're doing it and how we got around it, why we removed it, and now we're going to try to put it back. First, we're going to look at it in 3 months of market replay, which is very good. But the best way, after it passes muster there, is to trade it live. Now, here's your stochastic line. I like the fast stochastic, and I know that everyone likes to play with the inputs, and to me, it doesn't matter. It's of no value to me to play with those inputs. So let me just find the place that I want to. Okay, right here. You see where the market here goes. Now here's, the gold line is the signal line, and that's the one that matters. Now, when it goes above, it's a bounded indicator. So when it goes above 80, what would happen is that the 3-line indicator on the stochastic side would go yellow, and it would start shifting color because the market's overbought, and it just stays there. So what we're going to do is Sergio's coding it a new overbought assessment. So anything that takes place above the 80 line, where both the signal line and the stochastic line are above it, is going to allow that middle line to stay green and to tell you that the bulls have remained in control. If one of the lines drops below the 80 line, then it's going to go to yellow. So this is going to go green and stay green. And then once it starts to drop and the signal line crosses the stochastic line, then it's going to change color. So it gets around the problem of having to deal with an overbought market. And if you look at this overbought market, this is the period of time when it was the best time to go long. And if you go from here, in fact, let me make a box out of it. To here, you can see that the signal line, they're all twisting back and forth, but they're staying both above 80. And it just tells you that the bulls are firmly in control of the market, and in concert with order flow and momentum, it's going to give you a great long. So that's what we're doing, Bob. I mean, we're really trying to manipulate things to give us the most powerful signals we can. Okay, Charles. Yes. Those only are trades taken from 7 a.m. to 1 p.m. Eastern. That's correct, Charles. If the auto, and let me tell you, we haven't run all night. There was one night it made $1,000, but we don't count them because we don't recommend that it stay on. So if it takes a loser at 3 o'clock in the morning, we're not putting it in. If it takes a winner at 3 o'clock in the morning, we're not putting it in. We're going to run it from when Sergio gets in, he turns it on. He gets in at 7:30 a.m. in the morning. He flips it on. Around 12:30 to 1 o'clock, we're going to recommend that everybody turn it off, but we have to leave the signal on because we have so many people who email us irately telling us, I want to trade at night. So it's on 24/7, but that's the only period of time we're going to make an assessment of our performance, because we have not optimized it for the night owls, and I just don't believe it's going to perform that well when there's no volume. Alan, the stops are variable because here's how the stops are created. It stops you out on a reversal candle. And I have to find a trade where I can show you how that works. Okay, here's an example. Your initial stop on this trade, this is not a trade we would take, but here's the example. Here's a C candle short. So you're in the trade here, one tick below the close. The trade goes these many ticks. It looks like it goes a couple of ticks. It doesn't make any difference here. Then you get a reversal candle in the counter trend direction, the up candle. Now, once you get a reversal candle, the likelihood of getting a winner is extremely low. It can happen, but the probability, listen, everything the algo does is based on probabilities. So what it's going to do is on an initial stop that was one tick below here, this would have been a 7-tick stop. Now you're only going to take a tiny loss because your stop now becomes one tick above the close of the reversal candle. So if your entry is here, your stop is going to be 1, 2. You're going to only lose 3 ticks when your initial stop was 7 ticks. So that's why I say the stop is variable. If the trade goes a few ticks in your favor and then fails on a reversal, you're going to be out with a very, very tiny loss. So it's looking to maximize your profit, and it's going to minimize your losses. Okay? Well, Charles, you got to come back and work it. Because this week, we had everybody email us. Every single entry that we got, everyone got. And everyone made a ton of money. And remember, too, that we are constantly, we just upgraded it. If you look at our performance, it shows you the downtime. Every 3 months, we take it offline and we change it. Because if you remember, we had bonds and notes. They're gone because they just didn't meet muster. They started underperforming the market. And any algorithmic automated system cannot just stand on its own forever. So every 90 days, we look under the hood, and I can show you right here, offline for upgrade. That took us a month because we were not so great at doing these upgrades. Offline for upgrade. Offline for upgrade. And that's always going to happen. Now we're at $34,803 so far on 5,000 with all the upgrades. So we're always going to be taking it offline and making it better. And I don't know when it's due for its next upgrade, but what we're going to be doing is we're going to be adding these markets right after the first of the year. And we've done a lot of work on them, and they look really good. We're going to be adding wheat, corn, soybeans, if I can spell, copper, which is a really good market, and silver. It's going to trade those additional 5 markets. And it's so conservative that if it doesn't see a great entry, it won't take it. And the only trades that lose are the ones that just have no follow through on a perfect entry. And that's always going to happen sometimes. Not every perfect entry is going to be a winner. So we're going to add those 5 markets. Now, I know that you know that we have let me tell you why we don't give it out on a free trial, Alan. We used to do it. Let me tell you what happened to us. The free trial of our software, I know some people do it, and I'll tell you why we don't. It's we get people from Eastern Europe who request free trials, and then they break our code and they steal our software. And it already happened once. It was posted in a website that looked like it was coming from Eastern Europe, and it was up for about 3 months. And they had everybody's software. I mean, if you can think of this system, they were selling it. So that's the only reason why we don't let you have the software. If you want to come into the training room and watch it, you're more than welcome to do that for free. We'll put you in the room for a week. Just send us an email. In fact, there's even a place on the website. I think you can sign up for a free trial. We want to be transparent, and we don't want you to get anything that hasn't been vetted, but we don't want to give you the software package. But you're certainly welcome to watch it, but we don't want to give it out. Now, the Algo software you don't get because it stays in the server, and what you just get are the signals. So we're not hiding anything, and we want everyone to see how we trade and see how it works. So if there are any other questions, just let me know. Okay, yeah, I mean, we're not trying to, and I'm telling you, it's a real big business now, and then what we did is we asked for a $1 just so we had people's address, but you can buy these cards in the store and use, and that's what they were doing. They were just buying these these Amex cards for $10, and all the information we got was phony. And when we would go to find out, it would get okayed. So even the $1, and we don't really want to charge you anything. We want you to come in, and you're welcome to come in. Now we do have a special on the auto. If you're interested, I can send you the offer. You get all the additional markets. If you own the software now, you're going to get them anyway. If you don't own it, they will be add-ons, but you're going to get soybeans, corn, and wheat. Soybeans, wheat, corn, silver, copper, at no additional charge. And that's it. You know what? Paul, I love the E-mini. The problem with the E-mini is volume. And you know what we did? We set it up in the office, and we did not send out the signal, but we took it here, and the entries were great. And I'm going to show you the E-mini, Russell, and I'll show you the problem with it, because I like it. But here's the issue with the Russell. It is this. It's volume. Now, let's say we have 75 people on the auto, and the whole thing is trading 7,600. Now, today's a low volume day. The Russell does about 20,000 contracts an afternoon, but the volume is so bad that what we were doing is, just by trading it on sim in the office, we were getting 2 and 3 tick slippage on the entry. If we put this in the algorithmic system, you would enter the trade with 2 or 3 ticks of slippage, and that's absolutely unacceptable. If this ever got back to the way it was before they put it on the ICE and then moved it back to CME, we would take it. We would add it for sure, but you just can't trade. It gives you great entries, but on this kind of volume, you just can't trade it, and that's the problem with it. It's got no volume. It's the only reason that we don't use it. Is the volume problem? Otherwise, we would be there. And that's the thing. That's the biggest thing that we vet. There's enough on soybeans, corn, and wheat. Definitely enough on copper. There's just enough on silver. And those are real good markets. And we're going to look for other ones too. And I'll just show you one other quick thing. We're optimizing it for stocks. And today I was looking at Console Energy and just watching it move. And we're going to be moving it over to stocks very shortly. And if you have the system, you will get the stock signals. If you don't, it will definitely be an additional price if you don't have it when we go live with it, because it's taken us an enormous amount of work to optimize it on stocks. And then after that, we're going to optimize it on Forex. And I'll just tell you one quick thing, and I don't want to. There's a lot of people in the room, and I know it's an afternoon and it's a holiday, but we have solved the problem. And I can't show you because the Forex is a different data feed, and I don't want to close the whole platform and put up my Forex data feed because it'll take too long. Is that because it's just a warning, all Forex optimized systems don't work. And there's very seldom I can give you a blanket testimonial like that. They cannot work. And I'll tell you why. If you enter a candle, you have to optimize for a price on any algorithmic system, on any. And you have to optimize for some specific price. But on the Forex, you can't get the price. You can either get the bid or you can get the ask. So you have to optimize for the bid. There's the price. or you optimize for the ask. And the price is somewhere in the middle because there's a pip spread. The lower the volume, the wider the spread. So if you optimize for this particular entry, you can't get it. So how do you optimize for a price that you can never actually enter? And we've solved the problem. I'm not going to tell you what it is because it's only taken us about a year to figure it out. But we are going to be able to get the actual price on most of our entries. And I'll tell you what it is. It's because it's all only we can do it. And I'll show you in a second. If you give me 1 second, I'll have to put something up. Everybody who's in the room knows what this is. Hang on 1 second. It's already enabled, so I don't have to do anything here. Let me just find one. Okay. Hang on. Let me close this and move it over, and I'll show you how we do it. It's not going to work on every entry, but it's going to work on a lot of them. On the NDT, what we can do is we can take the entry on a pullback. You see the pullback here? We can set it for -1, or we can set it for -2. So let's say the spread, the pip spread, is 2 pips. The system will automatically set the pullback for 2. Now, some entries you won't get, but those are the entries you don't want. So what's going to happen is it's going to enter at the price. It's going to trigger at the price. Oh, looking at the wrong chart. But wait for that 2 pip pullback to the entry that you really want. That's the optimal entry. And that's either going to be the bid or the ask. If you can't get the pullback, you're not going to get into the trade. And it's going to be good you don't. Because that's the real price you want. And that's how we're going to do it. And the system is going to set the pullback on its own. Normally, we set the pullback ourselves with our NDT. The system will see the spread between the entry and the bid and the ask, and will set the pullback either on a long trade. Let's see, that's the higher price. So you're going to look for a pullback, and on the shorter trade, you're going to look for a pull-up. And that'll get you in at the optimized entry. And if you don't get it, the trade will just go past you because you don't want to take the trade on the spread. It's the only way to overcome it. And we've done it, but it's a real sophisticated system and we're working on it. So let me just see if there are any other questions. If they're not, we'll end. Hang on 1 second. No, I know. The RT, we're accumulating data. You know, Gene, the DAX is a terrific market, and we are all set to optimize on the DAX. And I just have to talk to Sergio, and we are going to set it up for the DAX. I love the DAX. I just can't get up. I just can't get up at night to trade it. It's the only thing. I'm a single dad. I got a 16-year-old kid who drives me crazy, and I can't get up at 2. I have to get up at 6 in the morning to make him breakfast. I can't get up at 2 in the morning to trade the DAX. If I could, I would. And we're going to optimize for the DAX. And all I have to do is tell him, and we're going to add that to the markets that we're going to put on. It's already optimized. We just haven't moved forward with it because now, and you know what, we haven't paid attention to it, but now that there's the mini DAX where you don't have to pay $3,500 a margin per contract, it's very, very tradable. You lose less money on a loss, you make less money on a win, but the margin requirements are not as high, and we're going to optimize for the DAX. It trades great on an 8 range. just like crude and gold. It's a very, very good market. And it's a wild market. Yeah, you can only trade it when the auto trader trades it, when you have that multi-time frame alignment and trend. And let me just show you again. All day, crude is in chop. No background bias. Now this is going up. This going up doesn't turn this background green. The background turns green, and then you know that price is going to rise. All of a sudden, this total mess here, in which you just don't want to trade from here to here, turns into the orderly movement of price up. And that is without a doubt the most important independent variable possible. You could do it yourself by looking at 3 time frames on every instrument you trade. If you'd want to let the software do it, it'll analyze it for you and make that determination. And if you wait for that color on all the instruments that you trade, the likelihood of getting a win goes up, I think, astronomically. And let me see how many people in the room. Okay. So I'll just tell you this really, really quickly, and I don't want to lose people. It's based on math, and I'll just show it to you really quickly. Sensitivity over specificity times the most key number is prevalence equals, it's called positive predictive value, but we can just call it win percentage. And when is the prevalence of getting a winning trade highest? When there's a trend. You're most likely, no matter how, I don't know what happened there. I'll just leave it like this. No matter how great your trade-off between sensitivity and specificity is, and you should trade with a great degree of specificity, not sensitivity, it's all balled up if you don't trade when the likelihood of a good trade isn't the greatest, and the likelihood of a good trade is what is really trend. So for our analysis, prevalence skyrockets during a trend. And that's why this multi-time frame alignment just really astronomically increases your ability to get a winner. And that win percentage is going to go way up based on your trading methodology, which determines the trade-off between sensitivity and specificity. If you trade with sensitivity, you try to get all winners. If you trade with specificity, you would try to avoid all losers. And that your goal is to avoid all the losers, not to get all the winners. 99.99% of all day traders don't understand that. Their goal is to grab every potential winning trade. Our goal is to avoid every potential losing trade. If you trade with that mindset, and then you only trade when there's a trend and the prevalence of getting a winning trade is high, your percent winners will really go up and you will become a profitable trader. You just need software that tells you when there's a trend, not just a trend on your trading chart, which is useless. It's got to be a multi-time frame trend. You have to trade in the same direction as the 2 higher time frames. And when you do, the likelihood of getting a winner is extremely high, with your mindset being, I want to avoid every potential loser I can. And if in so doing, a couple of winners skip by me, who cares? I've avoided all of the fake outs. I can't get every winner, but I've avoided the fake outs. And that's how you make money. Listen, if you have 9 winners and 3 losers in a trading day, You may not even make any money. If you have 2 winners and no losers, you can make an enormous amount of money. It's not about the winners, it's about the losers. And our goal in day trading or swing trading is to assess risk, stay when the prevalence of a winning trade is high, avoid risk with a lot of specificity, and only look to avoid losers and not care if a 300 tick trade gets past us. It didn't meet our criteria. It doesn't matter. The winners will come, and you're going to be sitting there when everyone else gets faked out on the trades that don't go. And look at all the traders here in the counter trend direction. Here, run over. Here, run over. You're going to see that over and over again. Run over, run over, run over, run over. That's what they're doing. They're trading MACD divergence, oscillator divergence. They're trying to take a short trade in a multi-time frame long trend. The prevalence of getting a winner on a short trade here is so low that their win percentage is astronomically low. That's really what it's all about. So if there are no more questions, I'm going to end. Oh, the NQ, Alan? We do trade the NQ. I didn't show it because there were no trades this week because it was such a choppy mess. And there were a lot of fake outs that I was really proud of the algorithmic for avoiding. Here's one. It didn't go. It didn't go. It didn't take an NQ trade. And that's the goal of the algo system, to avoid the losers, not to try to get into every winner. And you saw a couple of really juicy winners that it missed. But it got 10 trades and 10 winners. And that's all that matters. Didn't give the market back any. But look how choppy the NQ is. And this is a 13 range. So it just did, I mean, I can show you, it just didn't take a trade. But it's on it and it's looking. And I got to respect it because it's looking at more independent variables than I do. And if it stands down on a trade, you got to respect it. Okay, so that's it. We have the special offer. If you're interested, you can just give me a call. Let me give you my number. Obviously, I can't guarantee you're going to make money, but we sure try our best, and we take it with our money. And I'll just show you really quickly. I don't want to make this too long. We still have a lot of people in the room. I'll show you something really neat. I'll show you something really neat. Okay, since you're here in the afternoon, it's the weekend before Christmas. I'll show you something that nobody else will show you. I'm going to show you next week. I'm going to do a webinar on how to trade cryptocurrencies. I've been working on it for an enormous amount of time. I'm going to show you this real quickly. It's really a digression because it has nothing to do with what we're talking about. I don't like to digress like this. Hang on one second. But I'm going to show you how to really trade cryptocurrencies, not the way the crypto trillionaires tell you. I'm a crypto thousandaire. I've made some money on it because I'm very slow with it. 07724. But I think it's something that you should be invested in. I'm not going to go into a whole lengthy thing about it, but someday Amazon and all of these big online retailers are going to take one coin. And when they do, oh my God, look what happened to the profile. It's shut down. This happens all the time. See, due to the high traffic, it's offline. This is why you just have to be careful. This is Coinbase, and this is the most. Oh, here it is. We got it. Litecoin is the one that I recommended. In my newsletter, I recommended it $158 a coin. It was up as much. It was up to 325. It's down. Here's one day. This is the week. It lost $44 this week. For the month, It's up 264%. I'm going to go into all the reasons why I think that Litecoin is the one to do. And I'll just show you one other thing, and then I'm going to stop. I take all these trades live in my own portfolio. If you're a member of the options newsletter, we're up 100%. I am up 100% in my portfolio on my own money on this, and I take all the signals off of my software. I'll just show you. I'll show you quickly a newsletter. Here's 195. Here's the newsletter. Trade updates. Lows we executed. We made 65 for spread, or 57% in only 5 days. I recommended a bull call spread on Alba Marie. It's already open. Alba Marie mines zinc. I wanted to get into Twitter. I didn't like how it closed. I canceled it. I recommended 2 bull call spreads, one on Verizon, which is doing very nicely, and one on Broadcom. And the reason I read an enormous amount of information about 5G, it's going to start getting rolled out over right after Christmas and New Year. Verizon is the recipient. They're going to roll out 5G. The chip maker Broadcom is going to be the major player in that 5G rollout. You can see this is a spread that expires in February. The spread on this particular spread, the maximum you can lose is 250. The most you can make is 250. I like the spreads because they limit your winners, they limit your losers. On this Broadcom spread, the most we can make is 530 per spread. The most we can lose is 470 a spread. I can do all the configurations on Thinkorswim. Here's our portfolio. Lowe's, which is gone now, Home Depot, Alibaba, Aerojet, Rocketdyne Holdings is doing great. It's the company that's going to take these little rockets to the moon, and they're going to mine the moon. Autodesk and Salesforce are weak. Amazon is gone already. I should have taken it out. We made 55% on Amazon. We have Amcor, we have Corvo, we have Apple, we have DuPont. Microsoft is gone. We already sold it. I don't know why it's in here. This is gone. We already sold it for a profit. Raytheon is there, and Axovant. And here are our closed positions in 2017. We have 131 closed positions. This is not an updated newsletter. So that's all live. Now, what number is this? Well, that's way behind the times because those numbers were not. But that's it. All right. So if there are no more questions, that's it. If you're interested in the software or you're interested in the Algo system, just give me a call. I'm going to be here all day. So listen, I hope you learned something at the very least. Have a great afternoon, everybody, and have a wonderful holiday. Have a Merry Christmas. I hope Santa's good to you, and if you're Jewish, I hope you had a really happy Hanukkah. And we'll see everybody back here on in our trading room on Tuesday. So take care all, and have a really great afternoon. So long all. Bye-bye.